Gold prices crashed today, having its largest single-day drop since April 2013. And President Trump also made quite the statement, saying his meeting with Chinese President Xi Jinping might not happen anymore. All of this is happening as SPY is only a few dollars away from all-time highs, earnings season is ramping up, and we have crazy stocks like Beyond Meat short squeezing. It's an exciting time to be a trader.
The metals market is starting to shift. Gold and silver both tumbled down today as traders are locking in profits, and I cannot blame them. Gold was down 6% in its largest sell-off since 2013. That is a huge statistic. Over a decade ago, we saw gold have a sell-off like this. Now, of course, gold is falling down, but silver is also falling down with it, plunging down over 7%. But whenever I look at this, everyone's wondering, why is gold falling right now? Analysts at Citigroup actually said that they expect an end to the ongoing U.S. government shutdown as well as a U.S.-China trade deal to possibly contribute to gold prices consolidating over the next 2 to 3 weeks. Now, I do think that gold could keep consolidating, Mike. Whenever we look at the chart, gold is double topping around 403. It recently pushed past $400 and hit that major sell wall when it has not been able to push past that point. Now, as we zoom out on GLD, of course, it's very overextended in the short term. Even if we just go back a couple months to the beginning of September, gold is essentially up like 26%. That is pretty insane to say from, the end of August there. So whenever I look at gold, we've been up a lot in the short term. Do not be too scared by a pullback. I still think that gold will be solid in the long run, but you have to be ready for shifts in the market.
And Tom, like we covered last week, gold has never gone up 10 weeks in a row before. We can see every single time in the past when it has ran up 9 weeks in a row, it has pulled back, and those pullbacks tend to be pretty nasty as well. So I think a lot of people are looking at gold and silver right now, and they're asking, what is the move? What is next? When we look at, let's say, upcoming levels for gold, I know we have a lot of big banks and institutions with some very aggressive and optimistic price targets, but what are you seeing on the charts?
Yeah, so if we actually go to the gold spot price itself, we can actually see that right now it's trading close to $4,100 at the low of day today. I actually do have that as a pretty good support in the short term. We can see that gold has bounced off of this level before, so I will be watching for this to possibly hold tomorrow. If we do start to see gold flush through here, that's where I would start to look at GLD to the downside. And for GLD, I'm really watching 376 right around the low of day today. I know a lot of our viewers trade options, and of course GLD is one of the better gold ETFs to trade, so if we do end up breaking under that 376 point, that's where I'll be looking for a larger flush to the downside. Now, if we do see gold and GLD recover back up, I am going to be watching resistance close to 384 to 385. This is actually where gold bounced on Friday of last week, so if we can hold that range and bounce off of it, that could make for a good short entry opportunity, possibly back towards that 376 point and lower. But those are the levels I'm mainly watching for. Of course, gold has been extremely volatile the past few trading days. Just look at these wild up and down swings. So, if we start to see some crazy intraday swings back to the upside, don't be too afraid of that and watch for 399 to 403 where gold was peaking out recently.
Yeah, and let's keep in mind that this gold rally has truly been historic, and it's been something that people all around the world have been getting in on. And when we see a drop this quick and this violent, it certainly flushes a lot of the over-leveraged people out. And keep in mind that the further and the quicker prices fall, the more fearfully people panic sell out of it. So keep that dynamic in mind for gold and silver going forward. It should definitely be a pretty exciting next couple of days with it. But Tom, we are also in earnings season, so we also have a lot of big stock moves lined up as well. And one of the big tech stocks, Netflix, kicked off after the bell today, and it's not looking too hot.
It's definitely not. Netflix shares are falling. Now, they missed their earnings estimates. They did say that they have negative EPS here, 5.87 versus 6.97. That is a pretty big miss when you're talking about EPS. Now, revenue came in right as expected, so nothing too crazy there, but the EPS miss was rough, and they actually cited a Brazilian tax dispute as one of the main reasons causing their downturn. Now, if we actually go to Netflix and we look at the way that they're falling right now, that is a big drop. If we actually look at like the top of this candle from after hours to the low, that is down 7.6%. So of course that's brutal. They did say that there was a $619 million payment that Netflix had to pay, obviously to settle that multi-year tax dispute with Brazilian authorities. So of course there's a bad headline there, and that's what's causing, I think, a lot of the selling. But it's not a good way to kick off the earnings season. You know, Netflix is one of the bigger tech stocks kicking things off here, you know, being in the streaming sector. So I'm watching other stocks as well, like Disney. Now, Disney is falling a little bit in after hours, nothing too crazy right now, but I would say it's not one of the best reports here from one of the bigger players out there.
And Tom, guess what? A lot of people will look at this news and be like, oh, it's just, Netflix specific, but that's not the case, because if we go to the chart of the S&P 500, we can see as Netflix had that big drop today, the S&P 500 was also affected. Of course, not to the same extent, and Netflix is only the 17th heaviest weighted company in the S&P 500, and guess what reports tomorrow after close? Tesla, and they're the 8th heaviest weighted company in the S&P 500, so we should see some pretty big moves there as well.
I really cannot wait for Tesla's report. Everybody is waiting for them to announce something new with their Optimus robots. I think that that's going to be one of the biggest talking points tomorrow with Tesla. Hopefully they announce something good with that. Of course, there can be updates with maybe robo-taxis, maybe their full self-driving software. But either way, I think that Optimus has really fueled a lot of this Tesla rally. So I would love to hear some updates there. And, that might even come during the conference call. You might have to wait a little while for Elon to start showing those off a little bit. But Tesla's actually been stuck over the past couple days, Mike, and there is a critical resistance at $450. So it needs to have a positive report to really get us to push through there.
Yeah, so talking about the overall market, we're very close to all-time highs, and today was certainly a decent day, but at the same time, today's close was pretty weak. We had some pretty crazy news come out in the middle of the day today where Trump predicted that his upcoming meeting with Xi Jinping would yield a good deal on trade. But then he said, maybe it won't happen. Things can happen where, for instance, maybe somebody will say, I don't want to meet. It's too nasty. But then he said, it's really not nasty. It's just business. So, yeah, definitely an interesting statement here. The market has been pretty jittery over these past few weeks with this ongoing U.S. and China trade war because, Trump keeps upping the stakes, and as we've seen multiple times over the past few years, whenever the US and China have trade problems, it causes some serious selling pressure. Of course, the Liberation Day crash earlier this year was one small example of that, but if you look back to 2018, that was a huge deal back then, and the market's getting a little bit jittery from it. I look forward to seeing how this deal ends up progressing.
In 2018, we had a lot of drops throughout that year, right? And of course, as the year went on, the trade disputes got worse and we started to see larger drops come into play. Now, the SPY recently, it really broke past those highs before we got to those April lows from back in February. Now, we're obviously way above that, right? But the SPY has been in a weird dynamic over the past few trading days. I will say, it's been very stuck. We keep talking about this, Mike, but the SPY is still within the range from a couple Fridays ago. The low end of that range is down around 467 to 466. The upper end of the range is at the all-time high around 674. Now, I have a huge $2 range here between 672 and 674, and we can see that today the SPY traded right into that range and rejected. I thought that the SPY staying under 672 as it closed was a bad sign, and of course with Netflix going negative, it could help sustain sustain some negative selling pressure into tomorrow morning. So if we're really not able to break above that high of day from today around 673, of course, I'm not going to get too bullish. And if we do break 673, you have to be careful because the next resistance is right there at 674. So if we break 673, the best case scenario would probably be to realistically push up to the all-time highs and make new ones, of course. But Mike, I'm a bit worried that we're going to reject down. We have Trump still coming out with negative statements, and at the end of the day, I feel like things have been very shaky lately, very up and down, and we just had 2 days of okay price action, right? It's not like we had the most bullish price action in the world, but I could see it, pulling back a little bit here.
Yeah, like we're still close to all-time highs in a broad sense, which is great. But as you pointed out, we have some serious resistance overhead, and we are in a different market right now than we were in, just a few weeks ago, and certainly just a few months ago. I think it's going to take a good amount of momentum for SPY to break through this all-time high, especially if there's no good news that comes out, especially related to this US-China trade war situation. But I will say that if we look back at, historical seasonality, the market does tend to get a pretty strong bid around this time of year.
It really does. Like, we can see going into November and December, and a lot of people might attribute this to some of the holidays, but either way, we get a lot of buying pressure around this time of the year. Looking at this data going back to 1990 through 2024, we have seen some great price action throughout this time. So just keep that in mind. Now, of course, Mike, as we look at the overall market, there's not always going to be good data coming out, right? So we have some good seasonality, but at the same time, we keep seeing credit card delinquency balance tick higher. And we look at this chart every couple months or so, and my gosh, Mike, in 2025, it just keeps going up.
My Lord. Yeah, like you said, credit card delinquencies hit their highest level in 14 years. And it's like, just like you said, every time we check this data, it only gets worse. And it goes to show that, yes, the market is basically right at all-time highs, but the economy is, just getting worse and worse by many different metrics. And we have some important economic data set to release in just a few days, which is this month's CPI report. So on Friday, 1 hour before open, we're going to get an updated level of inflation. And that's something that the market is watching pretty closely, because the Fed is starting to cut interest rates, and the risk of them doing that is having inflation continue to uptick. And the Fed knows that, but they are more so concerned with the state of the labor market, and that's the risk they're taking. So ideally, we want to see inflation at least on a on a year-over-year basis come in pretty close to the estimate, around, you could say, 3 to 3.1%. Anything higher than that can be a serious red flag.
It really could. If we start to see inflation jump up too much, it's going to put the feds in a weird spot. They're trying to balance both sides of their dual mandate, of course, inflation and jobs, or the labor market, as they like to say. And whenever we think about this, if it starts to throw them back into limbo and they start talking about pausing or something like that, that might hurt the uptrend quite a bit. So I'm going to be watching for that carefully as we go forward throughout this week. And of course, I know that we already mentioned this, but Tesla's earnings will be a pretty big event for tomorrow as well.
Definitely. All right, Tom, let's get right into some setups and predictions then. And a stock that is definitely on my radar is Beyond Meat. So I know we covered this one in a bullish way yesterday. It popped up by over 150% today. And this is like the definition of a parabolic short squeeze. So basically, Beyond Meat is short squeezing, and they also had news where they were added to the meme stock ETF, ticker symbol MEME, which helped fuel some of this buying pressure. But also, and even more importantly, they announced a deal with Walmart to expand distribution to more stores across the US. So there's a lot of action and attention and just order flow imbalance is happening with this stock. It is still on my bullish radar, as stocks like these tend to move in a very asymmetric way. But just like I said with this one yesterday, this stock is as volatile and crazy as they come, basically. So as the stock starts to weaken, as the trend starts to turn, you have to protect yourself. Do not just blindly jump into this, close your eyes and hope for the best. as it weakens, you have to protect yourself.
And understand it's just a volatile stock in general. You know, if we look at some of these pullbacks today, like today, whenever the market opened, the stock popped up slightly and then literally pulled back 22%. You know, you have to realize that that's how volatile this stock is. Like some of these small intraday pullbacks are like well over 10% here. So just keep that in mind as you're trading it. It's volatile, but there are a lot of fun opportunities in the short term. Now, with my first play, I'm looking at a stock to the downside, which is Google. They had some bad news today where OpenAI actually announced their own browser named Atlas. Now, this is a pretty bad deal for Google, who has Google Chrome. Of course, Google Chrome has had a lot of positives over the years, also some negatives, but it's interesting to see some competition starting to come into play. I'll tell you what, this actually got a lot of hype today. People were pretty hyped up about OpenAI's browser. I thought that Google's initial price action was very negative. Now, I will say Google stayed resilient. They came right back and ended up getting right back to the 252 to 252.40 resistance range. Now, as long as they stay under that level for tomorrow, I'm going to keep watching them to the downside. Ideally, I would like to see a break back under 250. Now, they're like straddling $250 in after hours right now. So if we could see a good flush below there, maybe early on in pre-market or as the market opens, I will be watching for a further downside move. But Mike, like whenever I look at Google in the short term, we can actually go to the Bookmap and see that there's a lot of buy walls down around the low of day from today, around 244, 245, and 246. So of course, if we break 250, maybe target 246 to 244. But if we start to break that buy wall, that's where I think the real selling pressure and where I think that the overall breakout move would start to happen.
There we go. Let's keep a close eye on it. But another stock that is still on the radar is RGTI, and it's to the downside. I know I've hit on this one quite a bit over the past two videos to the downside, and it's just doing very well where it's still on the radar. It fell by over 7.5% today and just under 7% yesterday. A lot of people are getting flushed out of this stock as quantum names have kind of like irrationally just been crazy euphoric and certainly overvalued over the past year, and we're starting to just see like a lot of liquidations all at once. This stock is still on my bearish radar, but it's also worth acknowledging that the stock is down, nearly 30% from its recent highs. So at some point it is going to bounce up. No one knows exactly when that will be, but the more it continues to put pressure on its lows, the more people that get stopped out, the less people that want to buy in, and the more people that just panic sell it. So RGTI is still on my bearish radar, but of course, be aware of the fact that at some point it's going to start to bounce. So, just look out for that.
Yeah, I really am eyeing up this like lower support right around like $34 to $33 is possibly somewhere where it could bounce. But even with that, we could see a good drop down into that range as well. But with my next stock, I'm looking at Coca-Cola, and I saw that they gapped up with their earnings today in a pretty awesome way. They closed up 4%, and this is a stock that usually averages 0.78% whenever it goes up over the past year. So whenever I look at KO on the daily chart, it's ripping to the upside. It had this massive gap up. Now, a lot of people might say, well, Tom, isn't that overextended? Is there any way it could possibly continue up in the short term? Well, yes, it definitely can. If we look at KO and the way it popped up with earnings on February 11th of this year, it actually had a big gap up, but then continued up for a few weeks after the fact. Now, again, it didn't just go straight up. There were a couple of pullbacks mixed in, but especially the very next day and the next couple days, we started to see a good uptrend still materialize. So that's what I'm going to be watching for here with KO. I thought the gap up was fantastic, and I could see some of these recent highs coming into play around, $72 to $73, where we go up to at least test those, if not even possibly go for a possible breakout.
All right, sounds good. And let's jump right into today's momentum plays. With the first one, we have General Motors, ticker symbol GM, to the upside.
Look at that earnings move, 14.8%. If GM can break out above its high of day, close to 67.55, then watch it to the upside.
With the next one, we have Affirm, ticker symbol AFRM, also to the upside.
I really like the way Affirm came back at the end of the day. If Affirm can break out above 75.25, then watch it up as well.
And then with the last one, we have one of the most popular uranium ETFs over the past year, ticker symbol URA, to the downside.
Yeah, we're starting to see a lot of these uranium stocks and just, these types of stocks, nuclear stocks, start to pull back in the short term, whether it's URA, UUUU, or you name it. But whenever I see URA, if it breaks under 49.50, watch it down. It's straddling that $50 support range today.
All right, so we have these 3 stocks on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so you need to protect yourself. Whether you trade one of these 3 stocks or anything else, focus on making smart, long-term oriented, disciplined trading decisions. If you need help with that, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And then besides that, Tom, let's jump right into today's $773,000 big money trade. And we are looking at none other than GDS. So I know we actually had a big money play with this one before and it did pretty well, but GDS is a leading developer and operator of data centers in China. As we know, the AI and data center industries have been among the hottest over the past year, so it looks like the trader is positioning themselves to profit off of this continuing. Today, the trader bought the 35 strike call options that expire on December 19th of 2025. For my advanced traders out there, this is technically a call debit spread where they also shorted the 45 strike call options. Looking at this setup, I think it offers a really nice risk reward, and I also like how this expiration basically has it as a certainty where we're going to see an update on the state of this US-China trade war. If a deal can be made, this can potentially benefit Chinese stocks in general, and I would expect especially stocks that are in one of the hottest industries of the year. I think it's one to definitely keep on the radar, and I'm excited to see how it progresses.
Whenever I look at GDS, it is really straddling a pretty good support level recently that it's bounced off of a few times. And, it started to bounce up over the past couple trading days. And I'm with you. I'm glad that this gives, us enough time to kind of get past some of these trade war, at least a lot of the current trade war deadlines, right? Who knows how much it's going to get extended out past those points. But, November 1st is one of the big ones coming up. Of course, Trump still is meeting with Xi over the next couple weeks. So that could end up playing out here pretty well too if they end up, making up or, coming up with a deal. Either way, it's a very interesting setup. I like that it's the 35 strike calls and the 45s as well. 35 strike is almost in the money at this point, and I think that 45 is just about at the upper end of the range here. So I'll be watching this play quite a bit, especially with support. Now, if we do start to see a big pullback below this like $30 to $31 range, that's where I'll start to get a little worried.
There we go. So let's keep it close on watch. But if you are new to the channel, welcome, and consider destroying that subscribe button. Every single day, we do hours of research to cover everything you need to know in the market, whether it be recent updates between the US-China trade war, crazy stocks like Beyond Meat short squeezing, Netflix reporting earnings, gold crashing, historical stats, SPY levels and analysis, big money trades, and so much more. If you subscribe, you'll get our videos recommended to you more often. And Tom, let's also give a giant shout out to today's member of the day, Steve, in the StockedUp Discord, who had some nice $5,000 profits with Coca-Cola today. Huge shout out to you, Steve. Keep up the great work going forward. It is awesome to see posts like this one. And if you are into short-term trading, definitely check out that first link in the description and the comments down below to get access to the StockedUp trading floor. This will give you full access to our army of custom trading bots. You can chat with Tom and myself all day long, access the big money trades every single day that they're posted, but before they are talked about in these nightly videos. You can see exactly which big money plays are performing the best by using one of our many commands, and you can see just in real time plays moving higher. You can access a plethora of bonus bots where you can see everything from breaking news and golden sweeps to basically everything you could need for short-term trading. It's the place to be, and you can save quite a bit with coupon code BIGMONEY. So check it out. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.